Yashish Dahiya joins us, Chairman and CEO with PB Fintech. And Mr. Dahiya, good morning. Are you joining us from
Good
London?
morning. Yes. How are you?
All well. Our action is in India, sir. IPL was in Ahmedabad. You should have been here.
I was there till yesterday. I just came here yesterday.
Okay. Uh, you must be a very happy man looking at your numbers. Growth is strong, losses are coming down. This is in line with what we discussed last time when we met for an interaction. I mean, things are moving as per the script for PB Fintech.
Yes, Nikunj. I think we are essentially sticking to our own plan. And for us, there was no surprise. There was a little extra revenue, but I would say more like, maybe $1-2 million in the quarter. So it wasn't a huge surprise for us. It was exactly as planned.
The uptick what you saw in insurance business, was there a seasonality in play? Because of the tax law, everybody above 5 lakh, they rushed in to buy more insurance. There was a tax element which was there in last quarter. Do you think there was a one-time sugar rush in your Q4 numbers?
That's what I just explained. From a EBITDA perspective and a revenue perspective, roughly about $2 million, which you would be able to see that was an extra that came in because of the tax break part. However, it is a seasonal industry, so you will always have a Q4 which is quite strong, but one has to look at Q4 over Q4. So I would say when you look at Q4 over Q4, the abnormal numbers were about $2 million of EBITDA.
I distinctly remember we had a chat about your forward guidance, which is that you are aiming to make a sizable profit by FY27. Looking at your current run rate, losses have come down, growth is intact. Are you likely to reach that market in FY26, not FY27?
No, we're not giving any such guidance. I think the only guidance we gave was on our 27 numbers. And if you notice, we haven't given any further guidance either positively or negatively. So we will stick with that, and let's hope we do better than it.
Understand that, but when you gave this guidance of FY27, the setting on the table was different. Your aggregate losses were different. Your growth rates were different. You've turned things around. The progress has been heartwarming. So, are you tempted to move that number from FY27 to FY26, or are you just being conservative?
No, there is nothing of being conservative or being tempted to give out a higher number. See, we usually do not give out numbers. Why did we give out that number? The reason that number was given out was because there were question marks on, is this business profitable? Is it going to be losses forever? And I think there was a lack of understanding of our type of business. So I think the statement we made was that, look, this will not just be profitable, it will make 1,000 crore profit, give it a few years, and we gave a time frame of 27. I think at that time, a few people, I would say 5-10% of the people said, yeah, what he's saying is right. But I think 90-95% said it wasn't so. Today, when I talk to people, about 70-75% of people tell me, yeah, that's quite obvious. But all I'm saying is, because I'm running the company, I was trying to give a view of the company to the external world, which it did not have. But it wasn't that we would on a usual basis guide. Like, we don't give any guidance numbers per se. Like, we haven't given any guidance for what we would do in 24, 25 or 25, 26. It is just a single number that we've, put out there. That's all.
Yashish, just skimming through a couple of brokerage notes this morning on your earnings. And one thing that they've marked out is that your renewals have been very strong. Do you expect sustainability on this front? And would you say that there is any downside risk to renewals?
So renewals have to be strong, but they're not standalone. Renewals happen because at some point you did fresh business, and I would say 90-95% of the effort is in the fresh business, and roughly 5% of the effort is in making the renewals, because renewal rates are very high. So if you look at, for example, our health or life business, the renewal rates would be as high as 90% plus, right? And so in that kind of a situation, in this particular year, the renewals are a benefit we are deriving from the effort of the past years. internally, when we look at our own performance, we look at something known as transaction NPV divided by direct costs. Now, that is not a number, that's a gap number. We don't put it out. But the effort's already been put. The renewals is just, the train engine ran and the bogies are just following, right? So it's not like the bogies are running on their own. So a lot of people get confused and think about renewals as a separate business altogether. That's not the case.
Okay. What one needs to know is what the engine has been carrying, 5,000 crore rupees of cash on the books, right? How do you plan to deploy that?
So we have given ourselves a time period of almost 2 years from now to think about what we should do with the cash. I think that would give us sufficient time, and the cash, the market would have understood not just the cash reserves, but also the cash growth potential of the organization. So I think next year we should put in substantial cash. I think last quarter also we put in a lot of cash into the company. So if you notice, our cash balance is pretty much the same as it was on IPO day. So we've not been burning cash. From a cash flow perspective, we are pretty much where we were. But now we will start adding cash. And I think once we've demonstrated that, we will also come up with a plan. But I think we are about 2 years away from that.
Hi, morning. I just wanted to also discuss your outlook on the employee expenses, because that has grown, excluding ESOPs, by about 48%. It accounts for about 34% of your total revenue. If I'm not mistaken, around that level. Can you just walk us through what the outlook is on employee expenses and what the view is when it comes to the ESOP payout?
Sure. So see, our revenue went up by almost, I would say 61%. For the quarter, and I think 80% for the year. A lot of the expenses of employees are linked to that revenue growth. So you will see some impact of that, which is our operations team, because those employee expenses are direct costs. And then certain employee costs are in indirect costs. Last year, we have set up 2 new business lines, or both on the corporate side and on the POSP business, if you would. So the new initiatives, there's been a lot of effort and a lot of hiring for the new initiatives. However, that is now done. So I think as we move into the new next year, from March onwards, and this is an important part, because some people will see the year-on-year growth, because that is from April to March the costs would have grown. But from March onwards, I expect the people cost growth to be about 8%. We don't intend to increase on the indirect cost. The indirect people cost should be increasing at about 8%. However, the direct costs will tend to grow along with revenue, a little slower than revenue, but they would tend to grow along with revenue. And in terms of ESOP costs, see and I think what the market reacted to just after IPO was the accounting procedure of taking account of ESOP charges. And I think they are quite front-loaded. So if you think about it, we have now almost gone through about 1,200 crores of ESOP charges, which is actually a little more than if all the employees got all the ESOPs as of today. So all I'm trying to say is, in the first 2 years, what we've accounted for is actually on a cash basis a lot more than would go through to all the employees over a 5-year period. So that's more of an accounting thing, and you'll start to see the reversal of this, because as we go into the next few years, the ESOP charges will start to come down very dramatically, right? I would say long term, our ESOP charges should be about 100 crores a year. Long term, like after the 5-year period, it should be about 100 crores a year.
So how much is that 5-year window left? I would imagine 3 years are already done, right?
No, 2 years are done. In fact, 2 years are also not over. Our ESOP really starts from 1st of or 5th of October or 1st of October, I don't remember, 2021. So we haven't completed 2 years yet. So within 1.5 years, we have accounted for more than what we would actually spend over a 5-year period if you took it on today's share price value. So it's a bit of a accounting thing, and we are okay with it. Look, it is what it is. I think it made us look bad in the past. It will make us look better in the future.
It's just that future has been bought into the right-hand side first. I mean, markets completely understand that. My next question is that FY24 is where your credit business will also start kicking back in. It has reached a break even in December 2022. But in FY24, a full year of credit EBITDA positive kicker will also kick in. What will change because of that on an aggregate basis?
I think it's a great feeling, right? It's like your kid's grown up. Your kids no longer needs money from you. They are on their own and they've got their own job. If you really think about it, that's how I think about Paisabazaar and the credit business. I think the credit business should put in, and this is not a guidance kind of thing, but we internally believe the credit business will put in about 50 crores of profit next year. But it's part of our core business, right? Our core business, we have said, will increase profits by about 200 crores every year. 150 to 200 crores is what we say. I actually said 150, but I'm actually quite comfortable with 200 also. So I think it's just part of that, right? Paisabazaar going from negative to plus 50 is just part of that 150, 200 crores per year extra EBITDA coming in from our core business, which is both Policybazaar and Paisabazaar.
And the core insurance business, I'm just curious to understand that margins have improved from 8% to 15%. Now that's almost like a 100% jump. 8 has become 15. Why? I mean,
you're saying year on year. Are you talking year on year? Or?
Yeah. I mean, year on year is the right metric.
That is, see, if you think about it, I have said, 150 to 200 crores. Let's just stay with 200 crores, a simple number. Extra EBITDA every year. So what does that mean on a base of, let's say, a core business revenue about 2,000 crores, right? That's about a 10% increment. And I think we should see that. Obviously, the revenue will grow, become much bigger, but I think we should see EBITDA margin increases on a regular basis. I do not think we would, that's quite straightforward. See, it's very straightforward, right? The renewal part of the business, which is essentially a reward for past work. If you think about it from an expensing perspective, actually, maybe we should be getting the reward in the year that we do the fresh business, but we don't. So every time we do fresh business, in some categories, actually, our profits do not show up. And thus they show up in renewals in the future. But that renewal piece is picking up and growing at roughly 100 crores a year of revenue and thus contribution. Obviously, Paisabazaar is now growing and the Policybazaar new business is growing. So all in, I feel very comfortable that, 150 to 200 crores of extra EBITDA every year. And that is what the 1,000 crore number comes from. It's no rocket science, right? Next year, we will make a positive EBITDA of about maybe 100 crores or so. From there onwards, it's just the addition of those things.
Broadly, for next year, I would imagine would be above 400 crores. I'm just putting all their numbers together and just calculating.
Sorry, what's the question?
Cash flows. I mean, because we've spoken about the cash flow number.
So far, the cash flow so far has... so next year, I think the cash flow will be above 400 crores. We definitely hope so.
Crores of cash in the book, 400 crores of cash. When will you start paying dividend?
I think I just said we are going to think about our cash position overseas. We're a fairly boring, conservative company. We are in the tech business. We are in the insurance business. We have some very special goals. So we are who we are. But I think from a cash perspective, yes, we have a lot of cash on the books. We have to make up our decision over the next 2 years on what we want to do with it. It could be dividends, it could be buybacks, it could be acquisitions. We don't know right now. And I'm not going to say something before we know it. So give us 2 years and we will have a very clear direction on what we want to do with the cash. Yes, there is a lot of cash in the company, no doubt about it.
Wrap it up with one final question. Your guidance of 1,000 crore for FY27, that includes a number which you will achieve only from business operations, or on the cash which you're generating, you're assuming that you will get a yield and that also will kick back, because 5,000 will become 5,500 and it will become 6,000. If you get a 10% yield in that, that automatically gives you 600-700 crores.
Nikunj, our guidance was on the PAT. So it is whatever the PAT includes. And that includes interest income, just like it includes ESOP charges. So yes, I think, look, what's going to happen very soon is the market is going to say that, look, you have almost unfair numbers. And that's fine. We've also been in a situation when we were saying that we have unfair numbers, right? So I think it's karma, right? So we've been through the tougher times. We will have better times in the future. It's very straightforward.
Clear the air here so that there is no confusion when folks, so they watch the interview later on. Final question. Anchor investors, haven't heard anything from them. They all sold out, looks like, in the month of Jan and went away.
See, I know people will find it hard to believe, and sometimes even my friends say, look, it can't be true. But I genuinely do not know anything about what anchor investors want to do, and I don't engage on that front. The Tencent sale, I think it happened that day. After the sale happened, I got a message from Tencent, which said, look, you must have heard we sold a certain amount and we would like to talk about it. I said, that's perfectly fine. We're happy to talk. At some point, I think we are meeting in the next week or so. I think it's just a conversation, and I'm very grateful to them for having been great shareholders and continuing to be great shareholders. But we don't engage with anchor investors on when they want to sell, who they want to sell to. We don't organize block deals. All of that is done by bankers, and I know it's illegal to do so, but I'm just saying we actually don't do it. I'm pretty confident many promoters would be involved in those kind of things. We don't. We're just out of it.
Very curious to hear why Tencent sold, though. Maybe I'll line up another interaction with you then next week.
Sure.
Okay, but good to have you on the show. Thanks for so candidly speaking with us as always.
Thank you, Aisha. Thank you, Nikunj. Bye now.
Okay.